A very good day to all of you, and thank you for joining us at Innovate Launchpad for this session. Our speakers for the day. Well, we have a gentleman who has around 2 decades of experience in investment banking, a strong track record of deal closures, and has led origination and execution across M&A, private equity, and ECM transactions. At MK, he heads the investment banking business, where his prime focus is to ramp up the existing business by leveraging his relationships and his prior experiences of having contributed to build out of investment banking division in Motilal Oswal and Yes Bank. Ladies and gentlemen, let's hear it for our speaker, Mr. Yatin Singh, the investment banking head at MK. Welcome right here, Yatin. To join him, we have the one walking in with more than 25 years of his career experience. He has held several leadership positions across capital markets and financial service industry. His most recent position as head of institutional equities at SBI Capital Securities. Before joining SBI, Neil worked with Edelweiss as head of sales and subsequently as head of research and strategy. His experience in the industry is across a wide range of areas, including corporate access, research, and portfolio management, among the others. In one of his previous assignments, he was in charge of the PMS equity investment team at ICICI Prudential as head of portfolio management, directly managing assets over 12 billion. He comes with a strong research background and is acclaimed for his capabilities at expanding business and enhancing corporate access. Ladies and gentlemen, a round of applause for Mr. Nirav Seth, the CEO, Institutional Equities, MK.
Very long intro, thank you.
I'm sure it would be that way because you've put in those many years. So thank you both for being here. Just to give you a little heads up, our speakers are part of MK Global Management and are here to share their thoughts on going public in India. They were instrumental in the blockbuster IPO of Senco Gold. And with that, I would like to hand over to the two of you gentlemen. Thank you.
Hi, good morning, everyone. And thanks a lot to the organizers for giving us this opportunity. We'll talk about going public. I'm assuming that the audience has some interest in the subject. So we'll talk about both the commercial and the process aspects of it. We did get a fairly lengthy introduction, but maybe, just a little bit more about our firm to begin with, and then we'll delve into the subject matter.
So we are about 30 years old, first generation firm, started in 1993 by Krishna Kumar Karwa and Prakash Kacholia. CA rankers to begin with. It's a very, very competitive field, and I think we've done reasonably well over the last 30 years. We are primarily into 4 lines of business, institutional broking, and you got investment banking, wealth management, and then we got EIF. We run close to about 2,000 crores over there. A very small brief about what we do in institutional broking. It's very close to what Yatin does. We cover close to about 250 odd companies across about 30 odd sectors. And it's a distribution reach which eventually matters in terms of how well you do with the investment banking as well.
So, the way we view ourselves is that today, if it's a mid-sized business owner or someone from the senior management team of any business in any sector in India, we kind of have a 360-degree ability to serve his needs, both in professional as well as personal capacity. So the investment banking, the institutional equities, these are businesses which serve companies, on the capital market side. But the asset management, wealth management business could be of service for the corporate treasury as well as managing your personal finances. So, that's just a little bit about what we are. Um, you know, in terms of numbers, Nirav spoke about our stock coverage. These institutional clients, basically these are the guys who invest in an IPO. These are a mix of mutual funds, insurance companies, foreign portfolio investors, banks, private equity funds, alternate investment funds, anyone who participates in any stock market transaction. These are, some of the other things. We have about 500 employees across 11 locations in India. Bombay, of course, is the headquarters. So this is a little bit about Nirav and his team. Nirav? The takeaway is that fairly seasoned people, apart from us who help us do what we do, in our line of work, if you do good work, then you get acknowledged once in a while or pretty often. This is just a summary of some of the recent awards that we've won from some rating agencies and magazines and stuff like that. There'll be many more, of course. Yeah, so in terms of the matter that we are here for, which is going public, it's a part of the product portfolio that we offer as an investment bank, but we also do follow-on offerings, we do private transactions, we do buyouts, a whole host of products. Some of you who are from a corporate finance background may relate to this, otherwise you can totally ignore it. So yeah, this is about the investment banking team. Tejal couldn't join us today, she's not doing well, but between the three of us, we manage this business. Right, we'll take a pause here. And the next section is what I think will interest all of you a lot, which is the opportunity of going public in India as things stand today. Before we get into this detailed discussion, going public is something that a business owner and a business should consider at some point of time, in their growth curve. It, of course, provides you with growth capital, but beyond that, it kind of, brings a different degree of recognition, of acceptance in the eyes of the world at large, right? A listed company is believed to have very high degree of governance. It is supposed to follow the law of the land very well because, you are under scrutiny all the time. And it is supposed to be a responsible stakeholder for the economy and the society because of, the fact that you have public shareholders who kind of, create wealth as you grow along with them. Just to begin with, going public, of course, I spoke about the benefits. Like everything in life, it has both pros and cons. The biggest benefit of going public, of course, is that if you need money, then the markets are there to offer you money, right? So you get growth capital. It is, the wealth of the promoter family in the business, unless it's public, is all locked up, right? I mean, it is valuable, but you can't really monetize it in any tangible way, unless you want to sell the whole business, which is a totally different discussion. Taking your company public means your shares are listed, which means that there is liquidity in your ownership of the company. And should you have any personal need where you want to raise a small amount of money, you can sell those shares and kind of, get the money that you need. So that's another very important, benefit of being listed. Of course, once you're listed, any follow-on growth capital raise is much easier because, you've already gone through the grind once. It kind of helps you, as I said, diversify your investor base. You have a whole host of individuals and institutions who are part of your shareholder roster, and it brings its own benefits along with it. Should you be interested in pursuing any mergers and acquisitions, apart from cash, your company stock is also a currency that you can use. This is generally not possible if you're not listed, right? Unlisted equity doesn't really have any tangible liquidity, and hence, you can't really offer it to someone as a consideration in any transaction. Of course, it enhances your brand visibility and brand value by leaps and bounds. And yes, in today's day and age where talent matters the most, apart from cash compensation, ESOP-based compensation is something that does bring in a lot of benefits in terms of attracting talent, retaining them, rewarding them, and being listed allows you to do that, right? Otherwise, again, unlisted equity may not have much value in the eyes of the employees. What are the downsides? There aren't really any downsides, but yeah, being listed brings certain obligations. You become a part of a governance framework which the government and the regulators have created, and you're supposed to adhere to those. It does come with certain effort, certain cost. You need to ensure that you comply with, the SEBI guidelines, the stock exchange guidelines. Again, nothing special there. Just it's a set of things that you need to do, and you need to have people who kind of make sure that you're doing those. Then you, of course, are supposed to, because you have a base of shareholders who are not involved in the day-to-day running of the company, you need to communicate with them, periodically. Tell them what are you doing. Tell them why the business is doing good, if it's doing good. Tell them what's going wrong if the business is going through a tough phase, right? That's something that's expected, and that's something that, is advisable for any listed company to do. There are structured platforms which allow you to do that. So Nirav runs one of those, right? As an institutional equities platform, we help companies engage with investors through our research, but also through our conferences, through our non-deal roadshows, etc., etc. Of course, all listed companies are supposed to do at least one annual general meeting where you invite all your shareholders and kind of, present them the management views and put the management in front of them for answering any of those questions. If and when you decide to go IPO, it will be 6 to 12 months of extremely effort-intensive existence. It's not an easy process. It requires a lot of effort, something which is very different from what you've been used to doing on a day-to-day basis, which is running your business.
So, you just mentioned about one of the big advantages is access to growth capital. I also try and summarize that as survival capital. So most of the businesses that I know of, you are never on a treadmill. Either you are going up or you're going downhill, right? Which means that, just so that you can relate it better, Senco today has far more access to capital than what it had before being listed, which means that he will be expanding at a rate which is thrice or four times what it was historically, which means that someone else is going to lose market share, right? So over a period of time, it will become imperative that most of the companies of some relevant size will have to get listed. And if you don't get listed, if you are not moving with the time, then you are likely to left behind. So it's also a question of survival. Now, just to think, I distinctly remember Titan, and this was in 2002 when I was an analyst myself, and I covered it. And that point of time, the large part of the value in Titan used to come from watches. It is a very difficult business, marketing the different kind of SKUs. And at that point of time, the market cap of Titan was close to about $10 million, right? So, and from that to now $40 billion. Now think of it, if Titan wants to raise $1 billion, it is diluting equity just by about 5%, right? And you can do wonders with $1 billion of capital, right? And this is the beauty of capitalism, that once someone sets up a template in terms of how wealth can be created, a lot of guys are going to join that, right? So now you've got Kalyan, you've got Senco, you've got TBZ, and there are a host of the other companies that are going to come across. The good thing about the gold and jewelry is that it's a humongous market, right? Secondly, it's very, very India specific. The consumption of gold is very Indian, right? Which means that you can actually create multinational companies out of India. You're not to worry about a Cartier or someone coming over and taking over the markets. So there is an inherent competitive advantage that you guys have got.
So just kind of building on what Nirav shared, what applies to your business in the current environment, the boom that India is experiencing applies to a lot of other sectors as well, which is reflected in our markets too, right? Capital markets are a reflection of the health of corporate India. And if corporate India is doing well, as it is currently, markets will do well. So, these are just some statistics of markets over the last few quarters. We are touching new highs every day. What that means is that there is also a very big window for companies to go public, right? Because if secondary markets do well, then the appetite to participate in primary issues also grows. So if you'd see in the last 3 years, about 2.75 lakh crores, it's not a small number, 2.75 lakh crores worth of IPOs have happened. That is fresh money going into Indian companies who are offering their shares on stock exchanges for the very first time. That is what is an IPO. Right? Uh, these are, some of the statistics. So 124 companies in FY calendar year 21, 150 in 22, and 242 in the year that just ended. Right? There are two different kinds of exchanges, or rather two different kind of platforms within the exchange as it exists in India. We have what we call the main exchange, which is for slightly larger companies like Senco. And then for smaller SME companies, we now have something called the SME exchange, right? Which is kind of customized to the realities of SMEs in India. They may not have, the secretarial and the legal and the managerial wherewithal of a larger company, but they still are running fabulous businesses and they still need growth capital. And with that in mind, the SME exchanges were created. And as you would see, quite a lot of money is being raised on SME exchanges as well. In fact, in 2023, almost 5,000 crores worth of IPOs happened just on SME exchanges, which is a pretty large number. Right. Most sectors are doing well in India. Most companies are doing well. But as Nirav mentioned, right, gold, jewelry, this is something which is so inherent to India that if the country does well, these companies will do well. What we've put here is the stock price performance of some of the listed companies from your sector. You'd see significant ramp up, particularly in the smaller companies. So Thangamile, from 1st January 21, it has grown 4x, 400, almost 400 times, 400% appreciation in stock price. TBZ has almost doubled. Kalyan has also grown almost 3.7 times. Senco, we just listed 6 months back, is almost doubling its stock price. So, overall, there is a lot of positivity. That is also because, consumers are spending, they're buying jewelry. That is reflecting in the growth and the bottom line numbers of companies in the sector.
Yeah, so this is not in isolation, right? So we appreciate the fact that, you've got generally the tailwinds of being a bullish market, and all. The fact of the matter is that your profits are compounding, right? A lot of the guys, because you're not on the market, but if you look at the pre-pandemic and if you look at it right now, profits have more than doubled. So that's a CAGR of more than about 28%, right? So when you have this kind of momentum in economy, and then obviously you've got political momentum, what we're trying to highlight over here is the fact that over a period of time, as profits move, the stock prices tend to move. That is the only sustainable way of creating wealth and raising money and growing further. A lot of this is reflexive. You want to raise money, you take the money, you build more stores, you make more money, and then you reinvest that capital. That is how the growth happens.
Absolutely, right? In a capitalistic economy, equity is the most tangible way of wealth creation. When we talk about the wealth that Mr. Adani or Mr. Ambani has, that's not the amount of 500 rupee notes he has stocked somewhere. That's actually the value of his shareholding in his company, which is growing, and that's why their wealth is increasing. It can crash very quickly as well, as we saw when that Hindenburg thing happened. But yeah, just kind of trying to de-jargonize and kind of simplify the thesis for the group here. Markets like your businesses for certain reasons. We spoke about the fact that, it's a very India-specific. India itself is a very, very large market, and it's something that all Indians across social stratas, they do. They buy jewelry. They buy jewelry on festivals, they buy jewelry on occasions, they buy jewelry when their children are getting married. So it's a big part of the consumption wallet. And that attracts capital to organized players. And which is why, if you see, while the overall growth in gold quantity consumed in India hasn't been that much in the last 10 years, the organized guys have grown from about 10 to 15% of the market to now almost half of the market, right? And some of the things that the government is introducing, like BIS hallmarking, that's just going to create even more momentum towards organized players. And guess what? It's the organized guys who also access capital markets, go public, raise money, and grow. So as Nirav was saying, they have multiple growth vectors behind them. And, in fact, the guys who cannot remold themselves and become organized and start operating in an organized way, they're bound to be left behind. That has happened in all economies. It's happened in the West. It has happened in Asia, in economies which are ahead of us, like Korea, Japan, China. It's bound to happen in India, right? So the graph on the right-hand side is very important. That significant part of the market is moving away from mom-and-pop shops towards organized players.
I think one of the very important things that usually a lot of the people miss is that there's a natural tailwind to gold price, right? So like Yadin just mentioned, that when you look at the volume CAGR, it is not significantly higher. You are consuming what you are consuming 3 years back and 4 years back, maybe marginally higher. But your gold is always priced in dollars, right? So what happens is that usually, because, and I don't want to get into technicalities, but we run a current account deficit and we have got some higher inflation, which means that your rupee depreciates over a period of time. So just think of it, if gold price was, let's say, $100 in 2008 and it's going to be $100 today, even then your gold price will double. Because rupee then was 40. Today rupee is close to about 84, right? For people who run the business, this is a great, great advantage, right? Because there is a natural bias to your cost, but there is also an implicit repricing of the inventory that happens. So it's an inherently good business to be in, both for people who run the businesses and for the investors as well. You don't have, so this is actually like a consumer company, right? They are able to increase the price of soap, detergents every year. You got a natural tailwind even for a commodity like gold.
Which is, what we mentioned at the second prize, apart from the fact that it's a very large business. So these are the reasons why, we just thought we'll highlight why jewelry companies, not just gold companies, even, studded diamond jewelry companies are currently finding a lot of favor in stock markets. It's also to do with our lifestyle. It's also to do with the socio-economic changes. We now have a larger participation of females in the workforce, urbanization, nuclear families, things like those. All of those are tailwinds. So those are the standard consumption thesis for any consumer business in India. Very much applies to gold and studded jewelry as well. We spoke about the fact that now capital is available, right? And those organized players who access capital are able to squeeze out their unorganized competitors. So at least they see a lot of wealth creation for themselves. Now we have much better inventory management mechanisms in India. We have very, very standardized and organized ways of dealing with gold imports. Of course, we still have the problem of smuggling, but I'm sure that that's a small part. So all of that kind of brings stability to the underlying commodity, which is gold. And that reflects, in the business stability as well. Things like GST, hallmark identification, all of those, again, are a push by the government for the businesses towards a more organized, framework. And that's all of that kind of enables the organized players to do well, and hence markets are willing to support them. Actually, it's been a bit of a monologue, so we'll take questions, if any, in between as well, or we can do it in the end. This is just a snapshot of what happened in the recent past. So we had quite a few companies from your fraternity going public, different sizes. Kalyan Jewelers was almost 1,200 crores. Senco was close to 400. We had Motisan, we had Vaibhav. So these four were the main board IPOs. And then we had a bunch of guys who went ahead and listed on the SME platforms as well. If you see Shura Designs, they just raised 2 crores, right? 2 crores is not really a large number in the, it's like buying a single room in my apartment. But the point I'm trying to make is that capital is available. From 2 crores to 1200 crores for Kalyan Jewels, right? Should you want to raise it? Again, if some of you are considering going public, these are some of the things why investors would, how investors would rate you, right? So they will, of course, it's a bunch of other things as well, but a few things which are specific to your sector. One is regional strength. In India, other than Titan, we don't really have a pan-India player, right? So you have a friend Senko, which does very well in East India and is now making inroads in other parts of the country. You have players who are very strong in the south, who are now trying to come to Bombay and up north. Similarly, you have strong players from the west. So jewelry typically has been a regional play. Brands have strong